we haven't mentioned PulseX like at all tonight. So we haven't talked about PulseX at all. And I think that kind of like the Hedron and Icosa thing we're talking about is a sign that I think we have reached pretty much the lows, at least on sentiment with PulseX, as far as people thinking about it. When you were on last time with us last year, we had a great conversation about, is the PulseX depression in price just as simple as way too many people sacked for it? And yes, really was the answer. It's just kind of a mathematical equation. How many people sacked for PulseX and how much money was sacked for it compared to PulseChain? And that's kind of why we've seen it where it is. But at this point, we've seen sentiment around it just like die so much. People wanted the single-sided staking, and that didn't happen. And now they're not even thinking about the buy and burn. They're not paying attention to it anymore. It's just like some other empty decks is kind of the narrative. What's the case for it being one of the best buys in the ecosystem right now? I mean, I think you could pretty much throw a dart and be okay, really. But yeah, I'd like to check out that chart if you could, and just kind of give me your thoughts on PulseX right now.
So here it is. This is Pulse valued in PulseX. But what do you notice? Since September, Pulse has been losing value to PulseX for 111 days now.
Wow.
It's down 11%. So your intuition is correct that this was just so steeply undervalued, and now it's actually starting to take off. We'll flip the chart back over in a second to show you from the other angle, but this is there's a clear trend here where this is like a supply line. This is supply being absorbed up by market makers or people buying it, DCing in, and it just can't. It just hasn't been able to rise back above that trend line now for over 111 days, and the most volume that was ever traded on this chart here was down here at this ratio of 2.4 to 1. So then you could think of maybe this is like the magnet zone. So this is really wants to come back to here for sure. But if it gets above, in this terms, if it gets below this level and gets rejected, it's going back to this level at some point, right? When, I don't know. But in the immediate term, let's flip this chart back over. We're bottoming. Pulse. This is PulseX versus Pulse. We're bottoming. It's a double bottom. It's another same. I just shown you the same thing, but flip back over. The bullish cross came in on December 15th here on the MACD, and then MACD line is starting to move away from the signal line. So it's the blue line moving away from the orange line, which means that, and these are deep green MACD bars coming in. So that means that it's real new volume coming in to pick up, and it looks like it's in a pennant to me, just offhand here. And it's gonna maybe bust out the top and go, and then try to take out, come back and test this level here, which was like the second most highly traded level based on volume. That's 0.3 pulse per unit, so it's 3 to 1. So I think this level is the level to watch, 3 to 1. You could get back, in terms of pulse, you could get back 20% more pulse by catching this trade here. And the other way of looking at it is you're going to lose less pulse value by riding this up with a portion in your bag.
Well, we lost broke boy.
Oh, his internet went out again. Son of a.
That's all right. He'll be back, I'm sure.
He's really just going off to quick buy some PulseX.
Yeah, I think that's what he did. He signed off and gonna make a buy real quick.
Yeah, he'll be right back.
What is the ratio right now? You said you're looking at 3 to 1.
Right now, the ratio is 3.6.
3.6 to 1.
PulseX per pulse. And I think it was 3.69 not too long ago. Yeah, right over here before this red candle print. So, yeah, 3.6 to 1. And again, 3 to 1 makes sense to me. 2 to 1 would be like the lower range here. So yeah, I wouldn't necessarily say we're going to go to 2 to 1 anytime soon. That would be like a 43% drop in pulse value, or conversely a huge gain, 80% gain over pulse. I think. Let's see if my math's right. Yeah, 77.8%. So that's kind of what I'm seeing in this is like this trend holding for so long. It already broke down once before. That was when Pulse got really bullish. Remember?
Yeah.
And we had this move here. That was a lot of money flowing into the ecosystem. You can see by the volume bars here how big they get versus all these other bars. By the way, that makes me realize I'm having like ADD moment here. This these volume bars, they're trending down. So like the price is like climbing and grinding and consolidating as this volume comes down a little bit, which usually precedes a breakout. Usually the volume trends down, leading into a big breakout move, which is what happened here.
There's a term for that. What is that? Is that bullish divergence or something like that? Is that what that's called? No.
If when
the volume goes down and
if volume was going down and the price was going up, it would be bearish divergence. And if price was going down and the volume was going up, it would be bullish divergence. But this just chop sideways here that I'm seeing is this fundamentally what all I'm saying is that if price can hold, maintain, go stabilize and go sideways as volumes trend down, it's building up pressure like a pressure cooker.
Gotcha.
And it's especially true of how a lot of these bars have been green volume bars, and the red volume bars are a lot smaller than the green ones that came in to push it back up, basically. And a good example of this was actually here on the Axis chart recently, where we had like green volume bars just coming in for the last few weeks, and this thing ran up 580% against the dollar. And then today we had a massive sell candle down, and this is the highest red volume bar we've seen since this green volume bar here.
Yeah.
When this red came in, and then this bullish engulfing reversed the price. So, unless another big green bullish engulfing candle comes in to reverse price here, this would be a level to look for a reversal on this chart, because of the volume, the divergence in volume.
Well, I just bought some. That's why.
I figured that's what we said. You signed off so you could go make a quick buy.
I heard you.
Let's go.
But yeah, I mean, that's exactly what I've been looking at. Yeah, I mean, just sentiment wise and everything. Yeah, I think it looks great right now. People are just taking a big shit on it. So what do we got here from Philly?
Philly has a good question. It says, Axis, how do you see the buy and burn over the next 5 years? As that percentage grows, do you see the price growing big over time? And shout out to Compton for the super chat. We'll get to you next.
Well, let's look at the data.
So we're up over 3% of the tokens burned already.
Yeah, dude. So the longer it stays down here, doesn't it burn more PulseX per day? Pretty sure. Especially if we kept low prices and we got a lot of volume. So if everyone just didn't buy PulseX,
right.
I mean, it would burn even more. But the buy and burn is as effective as there are transactions on the network, right? So the way that it's going to work over the next 5 years is during the bull markets, when you get peak euphoria, the most should get burnt based on transaction volume. But if the price goes high enough, it might be kind of like neutral, right? Where you're just going to burn a shitload anyway, but it's not going to be as much as you burnt down here type of thing. But yeah, I could, if this is any sign of things to come, 3%, let's say per, how old is the network now? Since June.
8 months.
May 12th.
So let's say we do 3.5% per year. By the end of the bull market, we could have 10 to 15% of the supply burned away.
Wow.
And that's like what, 3-4 years from now, you could be sitting at 10 to 15%, and that's just based on these numbers, right, that we're seeing here. Mm-hmm. And if the adoption goes in bananas and PulseX volumes go through the roof, why wouldn't this get an uptick in burning? Then the other thing I wanted to say was the burning on this is really reliant on V1 with the old parameter, the broken parameter. So what we need to see here for even more burn is ink to go crazy to make people lock up more money into the farms and use that V1 protocol, because the V2 PulseX does not buy and burn as much percentage points, but the V1 burns like more than it's supposed to. At least that's the way it was. I don't know if it's been changed. So you'd want to see more liquidity shift to V1 to keep up with this rate as well. So more transactions and more incentives from the farms, which that can change during a bull market. The admins at PulseChain are going to be freaking diving into all these things and creating farms for different reasons to incentivize more buy and burn. I'm sure that's just how it would make sense to bring on all the cool functionality and utility at the peak amount of transactions per day and stuff like that. So,
yeah, Yeah, that makes a lot of sense because people do forget. I mean, this far out, and maybe they weren't even around back then. But whenever Pulse did launch, we had all these different farms. People got upset when the E-Hex, P-Hex farm got taken down and everything. We had a lot going on, and many have been pulled. And ink is so low that people don't really care. So, yeah, when there's stuff going on, man, to see that casino, the doors just open back up again will be phenomenal for sure.
Ink has kind of been a fun one, hasn't it? It's been.
I saw you tweeted you replied. I think it was
that.
to Katie. I saw a reply from you the other day, or to somebody about Ink right now. Yeah, what are you thinking about Ink?
Just about like, let's see if I click on leagues. Yeah, I mean, right now you can be a shark for $11,000 at this price, which is, I mean, yeah, not everyone's got 11. If a lot of folks watching the show maybe that are or out there that are just getting in, you're not going to want to put your 11 grand into ink, but for whales or like big players that already have big crypto bags to snap up a shark position now, you'd have to pay, maybe think of it like this, to get you to buy your time back in terms of inflation over the next year. You'd want to buy like $20,000. You want to get like 30 or 40,000 ink, because of the inflation rate being, consistent.
Chopped. Yeah.
So you're basically being forward thinking, and then that actually just gives you more to dump later anyway, if we're being honest. But then you could put that to work in the farms. Ink against PulseX would be like a good pair, I think, is because I don't know what it's paying out anymore. It's probably not as good as it once was, but as long as you can get that position now and then just let that churn for you on the two underperformers, just let the two underperformers churn more coins for you until the big move comes. Because I think Ink and PulseX, they tend to piggyback off whatever Pulse is doing anyways. So you might as well just let them farm for you while you're waiting for this to do what it's going to do.
And it's the only one that doesn't have an OA.
That's true. I did say that. It is the only one that does not have an OA. So is that indicative of why the price did what it did? That's what I'd look at it as, is like, what happens if the OA comes in and snatches up the whole supply? Right. And then what are you going to do?
Would certainly be interesting.
They're going to be hard to get.
Yeah.
Especially, as a year or two go by, it's going to be, they're harder and harder. Less of them are printed every year. I don't think many people know about that inflation model, So.
Yeah. So when let's see here, I'll get my drawing out quick. We finish up on this. So if ink inflates at a consistent rate, this is year one, this is year two, this is year three. Well, in year one, you're going to get 100% inflation rate. It's going to go from 0 to 100. And then the next year, based on the total supply that's existing from year one, you're only going to inflate the supply by 50%. And then on year three, based on this total supply, you'd have 33%. Right? So then it goes down, 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 down as time goes on. So at the prices are going to be the lowest when there's the most supply on the market, which should be sometime in the first year. And then so like you had the crash down, hyperinflation, and then the sideways, and then it starts to build up, and then it has a new cycle, and then it crashes again. But every time it's going to create price floors like this is how I perceive it going. And less of this supply is going to get printed into the future, right? Because these bottoms are going to get scooped up by the believers or the rich guys that just are going to accumulate it all and create a price floor.
Yeah, they're going to set the floor. Yep.
Yeah. Yep.
Yeah.
That's what we always got to look back to Bitcoin. What worked for that? There's a lot of truth in that chart. And so yeah.